Hi everyone, it's Don. It is November, I was going to say 13th, no, November 3rd, Thursday. And let's take a look at Nicholas. The VIX component from the 14th is still short. Isn't this amazing? What's amazing is that the market sold off as hard as it did. Bad action yesterday, lousy pen action today for the bulls anyways, and the VIX keeps coming in. So Nicholas is still short the VIX. He's still long all four markets, and we'll add this up, but it's really come in, right? It was up almost 40 grand, and it's really come in, but he has still maintained his position. The question is and we'll plug in after we compress this video. We'll come in and add this up, and so you'll have the exact number. But let's keep working across here to save time for everybody. Let's look at the VIX, and the VIX is still showing a risk on. So the VIX is not confirming the sell-off. So it's odd. It is just odd. Does the market, explode to the upside, confirming that the VIX has it right? Or are we going to see the VIX catch up in one day and explode to the upside and the market break? Let's keep looking. I'm not sure. It's an odd combination. Skew. Holy mackerel. Now this doesn't reflect today, but it reflects yesterday. The skew keeps going down. And we're at 110. I haven't seen the skew this low in a long time. I'm talking more than a year or more. Now, a skew this low is telling us that they're paying a ton of money, more money for calls than they are for puts. So they're not fearful. They're not pricing in a further collapse in the market. This is telling us that they're preparing for a major rip higher. That's what they now. It's not a great timing tool, but that's what that means in this juncture. If we were at market highs and the market had been running, and we were at 4,200 and we had a skew of 110, I'd be saying, hey, this market is way overdone and we're probably going to come back. But that isn't what's happening. The market has sold off very, very hard. A couple hundred S&P points, hundreds of NASDAQ points, and as we do this, the skew, so they're buying calls. So I'm back even this far. I mean, we'll give an assessment, but I'm thinking as near as, tomorrow, as near as early next week, we're going to rally. And what is the catalyst? Well, it could be the election. The outcome of the election could be. And it also could be a CPI number next week on the 10th. Is the CPI number. We also have, I believe tomorrow, a jobs number. A rise in unemployment could be perceived as being bullish because it could give the Fed pause, even though the Fed talked tough. A rise in the or a lowering of the CPI on the 10th could be bullish in that it gives the Fed pause. An election outcome, boy, I think if anything, just the fact that the election is over and it's peaceful and there's an outcome could be bullish, could be, but this is not pricing in some sort of market crash. That's my interpretation, but we'll see, right? We're going to learn as we go. It's amazing and we've been doing this for years, how the conditions of the course can change. It's never quite the same. And you can play the same golf course day after day, and it's different. This one's a little different, so we're going to see. That's why I want to take the time to describe. And here we are, the spread, we're virtually inverted, but it hasn't, the market hasn't broken. So what could happen is, if any of those things, if the market begins to sense that the Fed is going to interpret some of this data as a pause, they don't need to say it, the market will price it in. These yields would come in and the spread would widen and the banks would rejoice. The banks would be very happy because the banks borrow short-term money very cheaply and they got the rates up. Could fatten up the banks. I'm beginning to smell a bit of a setup here. That's what I'm thinking. Seasonally, the markets have a tendency to be bullish. We've been down all year. The highest the market got was on January 3rd, I think, of last year. Or earlier this year. So, a rally into the end of the year, I think it's possible. I know the sentiment, the overall sentiment's ugly, and let's look at the sentiment. Here, the VIX, they're panic selling the VIX. The ES, it should be higher, so it's got plenty of room to run. But it's at 37.19. But the VIX is not telling us that the market is going to break down. So I'm a little surprised that the market isn't over here, and so I think it's inclined to get there. The NQ, same thing. It's a little bit overdone. The Russell is hanging in there, and certainly the Dow. So I'm inclined to think that we bounce here, that we got to bounce in the next few days. That's what I'm thinking. And the American dollar, it has strengthened, but it's not euphoric, and that still might come in a little bit. The metals, gold's, I think, is overdone. I think gold, if you've ever been interested in buying gold and silver, I think this is an opportunity. I do think so. And you could do that any number of ways. You don't have to do it in a leveraged position, but we continue to add to gold and silver on weakness. Energy is looking good. The bonds, I'm not going to short. If the rates come in, particularly the 10 and 30, they'll rally. So there you have it. Let's look at the ETFs. What do we see here? Gold miners jump out, panic selling here. Same story. Dow and the Russell, and then the Qs. And I think the Qs are just overdone. So I would be looking at call options as well on NASDAQ. Apple, Amazon, Meta, Align. We'll go to them. Interesting. Look at the financials. They're doing pretty good. So what are they? And that's always good. Consumer discretionary, not so good, but seasonally coming into the Christmas time, I would think that's going to rally. So that's what I'm thinking. I think the little the little bastard's going to rally this. I really think so. We'll have to see. Let's keep going. We're going to go to the S&P sentiment. And see, there's a ton here. But we're not making new lows on the S&P. And the VIX isn't confirming this. So any number of these, take your pick. Maybe the best one, Amazon, at below 90. You can buy 90 calls for December, for January maybe. On Amazon, maybe. PayPal, I think, has earnings. Boy, that got crushed. We will come back early next week. None of these will be here. They'll be over here. That's the way it's shaping up. Let's keep going. Let's look at the NASDAQ sentiment. Nothing over here. So the NASDAQ's been crushed. And Google at 83. Qualcomm, Amazon, Microsoft. I think we're scraping bottom on these. For at least a bounce. I'm not saying a long-term investment, but for a bounce. What is this? This is Cognizant Technology down at $50. And DocuSign at $41. This was a $400 stock. Will be coming in. And, and I might even buy some shares in something like DocuSign and go out, buy it in a retirement account, buy a chunk and sell some 45 calls going out, 45, 60 days. We'll see where they are with earnings. Consolidated view is not where we want to go, so bear with me there. Let's go to the Pebble Beach. Okay, so we did get some more sell signals here. What about the buy, though? What is this? Bio-Rad Labs. That looks good to me. That looks really good for a bounce. And the rest of these sells. Tomorrow, Monday, Tuesday, with this market having been hammered, please keep the Pebble Beach triggers up. And when they start to populate, that's going to give you your timing for some of these call options on the stock. Those that are seeing, you get the nightly video, but those that have this on their desktop during the day, they will get populated. So the day that turns around, this will be stocked up, and you'll get the heads up before everybody else. All right, let's move to the intraday. Okay, so 53 hours. We've been short for 53, 54. The Russell. See, the VIX is short 6 hours ago. That's a bit of a tell. These should be long. Keep an eye on the 1 hour. This 1 hour goes long tonight at 3:30, 4:15, 4:30. I will go long. I will set alerts to my phone if I got to get myself up early. I want this next long signal on the 1 hour. If it comes, it's not if it comes, it's when it comes. It might be overnight. It might be tomorrow. It might be early next week. But that next one, particularly on the NASDAQ, this 54-hour signal on the NASDAQ has generated $13,000. That's extreme. That's extreme. So just a counter move back. Let's look at the traditional view. This is gold. Let's see here, gold. Interesting action here today. Notice true low here. This is the true low in gold. Did we go lower? This is the true low, is 151. We went to 150. This did not. This should be bought. We'll be buying more gold, GLD, tomorrow. Maybe even the next day. We'll be buying more. Let's go to the SPX. Okay, this is a little bit of a doji candle here, a little indecision. What do we got here? This is a bullish wedge. If this holds tomorrow and we crack up higher over the next 2 to 3 days, the bears could be trapped. This could be a trap. This is a bullish wedge. This area has held thus far, technically. Let's look at the VIX. That's the only issue here. The VIX sold off. See, I wish the VIX had responded in kind to the sell-off, but it didn't. And it's just sitting here. So do keep an eye on the VIX. If the market sells off in the next few days and the VIX is exploding to the high, don't get in front of it. But if the market sells down again and the VIX isn't responding, I think it could be exploited. I'm a little bit perplexed as to what my concern is, though, that this from here to here is still a bullish wedge, and that the market is selling off, and there's something, if anything sets this VIX off, then that will confirm, and everyone will say, oh, that's what the problem is. The market is bearish, it is ugly, and then maybe even a further leg down, and then the market really breaks and craters, and the VIX confirms and explodes higher. So please keep an eye on the VIX. Please do. On all time frames. And here is the S&P on our Renko view, and we tried to break out from here. Didn't work. This was unfed day. We literally were up there, and then we come right back down, and we're jammed up at this 3760 area. We need to get above 3760 quickly, like tomorrow. If we can get back above, then we might be able to make another run at those highs. If we stay underneath 3760 and we sell off again tomorrow, especially if the VIX begins to confirm the bearishness, and it's tough to rally in a down tape and a negative tape. It's been negative. We could be right back down here to 36.39 would be the next stop. So tonight's date when we post the video will be green. Why? Because Nicholas is still green. He's given up all his profits. I hope anybody who had that signal wouldn't have done that, but he's given them up. And you can set Nicholas, by the way, you can optimize Nicholas with profit targets and stop losses and play it much more aggressive than the way we report on it. We report on it wide open with no stops, no profit targets, so everybody can see the dimensions of the signal, the full dimensions, and not know that we haven't short-circuited the signal with any of our profit targets, right? I hope that makes sense. If it doesn't, let me know. The VIX has come in. I think we got to keep an eye on that. But the VIX is still telling us that the market is more than likely going to rally. That's the way I'm interpreting it. The skew is bullish. It's bullish. Skew is telling us they're going to rip our faces off on the long side. And I just don't know it doesn't give us the timing. But the risk is a rip your face off rally, not a collapse. That's my interpretation on the skew. We'll see. Skew is a little bit, it's one of we added it a few years ago. We didn't always use skew. We've had mixed emotions about it, but it has helped. We'll see how this signal plays out. But we're committing. That's what I'm thinking. And we think that gold is interesting here. We think silver is interesting here. And we think the NASDAQ on the long side between now and December, January is really interesting here as a trade. That's what we're thinking. Wouldn't go crazy. You want to trade proportionately. So with that, we're going to say good night and good luck with everybody. And we'll see you on Sunday. Let's see what they want to do tomorrow. I think the bears might get trapped. I think it might have been a little bit of a trap. And I'm not sure if the employment number is going to, we won't repeat what we said earlier. But I do think there's a jobs number tomorrow, and that might be the, the start of the ignition, if you will. And then next week. Good luck, everybody. We'll see you Sunday. Have fun.